Welcome to the third deep dive of Daily Crypto. Today, we're plunging into the fast-moving world of cryptocurrency. Think of this as your shortcut to understanding what's really important right now. We've sifted through a stack of recent news to bring you a concise overview of the key developments. Our mission is simple, to help you extract the signal from the noise and understand what truly stands out in the crypto space right now. So let's dive right into what's been making waves.
Yeah, absolutely. And what immediately jumps out is the somewhat mixed picture in the crypto markets. You're seeing a bit of a seesaw effect. For instance, Bitcoin is currently hovering around $82,565. It's had a slight dip recently, just under 1%. Ethereum is in a similar position, trading at about $7,786 with a minor decrease as well. Even some of the other major coins like BNB and Solana have seen small downward movements. Now, what's interesting is to consider why this might be happening. Are we seeing profit taking after a run up, or are there, broader market concerns at play?
That's a great question. And it's not all red arrows, is it?
Yeah.
XRP seems to be bucking that trend, showing a positive climb of over 1%, trading around $2.05. And then you have the meme coin arena, which is always.
Oh, it is its own beast, yeah.
Exactly. Shiba Inu, Bonk, and Dogwifhat have all seen some positive percentage changes recently, which, always gets people talking. But then you have Pepe and Popcat experiencing some downward pressure. It really highlights the speculative nature of that corner of the market, doesn't it?
It really does.
Interestingly, there's also chatter about the Nasdaq Composite potentially facing a significant drop. This brings up a crucial point for you, the listener. How might Bitcoin, often touted as a decentralized asset, hold up if traditional markets experience a major downturn?
Exactly. That potential decoupling or lack thereof is something a lot of people are watching closely. Historically, the correlation between Bitcoin and traditional markets has shifted. Sometimes they move in tandem, other times Bitcoin seems to sort of chart its own course. Macroeconomic factors definitely play a role, influencing overall investor sentiment and risk appetite. So if you're tracking Bitcoin's performance, keeping an eye on broader economic indicators is definitely worthwhile.
Okay, so a nuanced picture on the price front. Now let's pivot to the regulatory and political landscape, because that can often have a significant impact on the crypto world. It sounds like there's been some movement in Washington.
Yes, there are a couple of key developments to note. Tom Emmer's bill, which is aimed at opposing a central bank digital currency, a CBDC, in the way it's currently being discussed, has apparently cleared a committee in the U.S. House. For you, this signals a growing debate around the role of government in digital finance and potential concerns about things like privacy and centralized control over a digital dollar. The fact that this bill is advancing suggests that these are significant concerns being voiced at a legislative level.
Right, and then there's the potential ripple effect of tariffs, specifically those proposed earlier. It seems they could inadvertently impact the U.S. Bitcoin mining industry.
That's right. The reports indicate a potential 34% export duty on goods coming from China. Now, why is that relevant to Bitcoin mining? Well, a significant portion of the hardware used for Bitcoin mining globally is manufactured in China. So if these tariffs were to be implemented, it could lead to increased costs for U.S.-based miners, potentially affecting their profitability and competitive edge in the global mining landscape. If you're following the mining sector, this is a policy development to keep on your radar.
And we also saw news about a Senate committee passing Paul Atkins as the potential new SEC chair.
Yeah.
What kind of shifts might that signal for crypto regulation?
Well, the appointment of a new SEC chair is always something the crypto industry watches closely. The Securities and Exchange Commission plays a vital role in overseeing and regulating various aspects of the crypto market. Depending on Paul Atkins' views and priorities regarding digital assets, we could see changes in enforcement, guidance on token sales, and the overall regulatory approach. For you, this could mean shifts in how crypto businesses operate and the level of scrutiny the industry faces. It's a development that could have, wide-ranging implications.
There was also a brief mention of Liberation Day tariffs causing some unease in the crypto markets. That term sounds quite significant.
It does. The fact that these tariffs, whatever their specific nature, caused a reaction in the crypto markets underscores just how sensitive digital assets can be to broader economic and geopolitical events. Any significant policy shift, particularly those impacting global trade and financial flows, can introduce uncertainty and volatility into the crypto space.
Okay, so a lot to digest on the policy front. Let's switch gears again and look at the technological advancements happening. What exciting upgrades are on the horizon?
This is where things often get particularly dynamic in the crypto world. Ethereum developers are reportedly aiming for a mainnet launch of their Petra upgrade around May 7th. Now, what's a mainnet launch? Think of it as the deployment of a major software update to the live, functioning Ethereum network. The Pictra upgrade itself is significant because it bundles in various improvements and new features designed to enhance the network's capabilities, potentially leading to better scalability and new functionalities. If you're invested in or building on Ethereum, this is a key update to follow.
That sounds like a substantial step forward for the Ethereum ecosystem. And Cardano is also making moves, this time in the realm of digital identity.
That's right. Cardano has recently launched a new open-source digital identity platform. Digital identity is becoming increasingly important in our online lives, and blockchain technology offers some compelling solutions for creating secure and user-controlled identity systems. Cardano's entry into this space could contribute to the development of more robust and private ways for individuals to manage their digital credentials.
We also heard about Datagram unveiling a decentralized backend for scalable DPIN networks. For someone who might not be familiar with that acronym, what exactly are you talking about?
Right, yeah. DPIN stands for Decentralized Physical Infrastructure Networks.
Mm.
Think of it like building real-world infrastructure things, like wireless networks, energy grids, or sensor networks, but in a decentralized way, often leveraging blockchain technology. Datagram's new backend is designed to provide the underlying technology for these networks to grow and operate efficiently. This could pave the way for a whole new range of decentralized community-owned services and infrastructure.
And WisdomTree, a more traditional financial player, is expanding its presence in the crypto space with a tokenized fund platform. What does tokenized fund mean in this context?
Good question. Tokenization, in this sense, refers to the process of representing ownership of traditional assets like stocks, bonds, or real estate as digital tokens on a blockchain. WisdomTree's new platform allows them to create and manage these tokenized funds across multiple blockchains. This is a significant trend as it can potentially bring greater efficiency, transparency, and accessibility to traditional financial markets by, leveraging blockchain technology.
There were also a couple of other interesting tech updates. Paraswap rebranding to Valora and launching Delta V2.5, and Water forming a partnership with Avalanche. What's the significance there?
The rebranding of Paraswap to Valora and the release of Delta V2.5 likely point to an ongoing effort to improve their decentralized exchange aggregator platform, perhaps focusing on better user experience and more efficient trading. As for Watt's collaboration with Avalanche, their aim is to bring the commodities market onto the blockchain. This is a potentially transformative idea that could revolutionize how commodities are traded and managed by making the process more transparent and efficient.
It's quite remarkable how rapidly the underlying technology is advancing. Now, unfortunately, we also need to address some of the less positive aspects of the crypto world, specifically crime and legal issues. The report coming out of Scotland is quite striking.
It is. A reported 2,000% increase in crypto-related crimes in Scotland since 2019 is a really concerning statistic. It underscores the need for increased vigilance, stronger security measures, and more effective law enforcement to tackle illicit activities within the crypto space. It's a reminder that while the technology offers many benefits, it's also a target for bad actors.
And then there's the legal action involving Justin Sun and the issuer of the FDUSD stablecoin. The amount mentioned is substantial.
Yes, the reports indicate that Justin Sun is pursuing legal action against First Digital Trust, who issued the FDUSD stablecoin, alleging embezzlement of a significant sum around $500 million. This is a high-profile legal battle that highlights the financial risks and potential for significant disputes within the crypto industry, especially concerning stablecoins, which are meant to be a more, stable part of the ecosystem.
We also saw that a company called Genius Group is reportedly being compelled to sell off its Bitcoin holdings due to a court order. That's an interesting intersection of traditional law and digital assets.
It is. It really illustrates how traditional legal frameworks are beginning to interact with and exert authority over crypto assets held by companies. It serves as a reminder that even though cryptocurrencies operate in a digital realm, they are still subject to the rulings of conventional legal systems.
And finally, in the realm of potential vulnerabilities, there was a mention of an exploit affecting Hyperliquid's Jelly protocol, along with warnings about other DeFi platforms. What's the key takeaway there?
Well, the exploit on Hyperliquid's Jelly protocol is a stark reminder of the inherent risks that exist in the world of decentralized finance, particularly concerning the security of smart contracts. Experts are advising users to exercise caution, as similar vulnerabilities could potentially be present in other DeFi protocols. It really underscores the importance of thorough security audits and the need for users to understand the risks involved when interacting with the DeFi platforms.
Moving on to the exchange and custody landscape, it seems like there's a fair bit of activity happening there as well.
Definitely. Exchanges are the primary gateways for many people to interact with cryptocurrencies, so developments there are always noteworthy. For example, there's a report of a significant amount, $33.27 million worth of newly unstaked Solana being deposited into major exchanges. Now, why might this be happening? It could be for a variety of reasons, from users looking to trade or sell their Solana holdings to potentially restaking them on a different platform.
And Coinbase, a major exchange, might be looking to expand its offerings with XRP futures. What would that mean for investors?
Reports suggest that Coinbase has filed an application with the Commodity Futures Trading Commission, the CFTC, indicating a potential move to launch futures contracts for XRP, possibly as early as April. Futures contracts allow investors to speculate on the future price of an asset. If approved, this would provide another way for investors to gain exposure to XRP and could potentially increase trading volume and liquidity.
We also saw a significant price jump for AMP ahead of a planned listing on the Bithum exchange. Is that a common occurrence?
It is quite common in the crypto market, yeah. You often see a price increase in an asset when a listing on a major exchange like Bithum is announced. This is often driven by the expectation of increased trading volume and greater accessibility for investors. However, it's important to note, as the report does, that this kind of price surge can sometimes be short-lived, and the momentum might not be sustained after the actual listing.
Right, sort of a buy the rumor, sell the news kind of thing sometimes.
Exactly.
Bybit, another exchange, is making some changes to its custody solutions. Why is custody such an important aspect of the crypto space?
Custody refers to the secure storage of digital assets. Following some controversy related to their safe wallet, Bybit has announced a partnership with Zodia Custody, which is backed by Standard Chartered, a traditional financial institution. This move towards partnering with established custodians suggests a growing emphasis on providing secure and regulated custody solutions, particularly for institutional clients who require a high level of assurance regarding the safety of their assets.
And Republic's acquisition of INX seems to be a significant move, especially in terms of regulatory licenses.
Absolutely. Republic's acquisition of INX at what's described as a substantial premium is noteworthy because it provides Republic with access to INX's U.S. trading licenses. These licenses are crucial for operating regulated platforms for digital securities in the United States, so this acquisition represents a significant step for Republic in expanding its regulated offerings within the U.S. market.
Finally, in the realm of exchanges, there was an interesting tidbit about an early participant in the Ethereum initial coin offering the ICO depositing a large sum into Binance. That's a throwback to the early days.
It certainly is. Seeing a significant amount, like $3 million, being moved by someone who participated in the original Ethereum ICO raises interesting questions about their long-term investment strategy and the potential movement of these early held crypto assets. It highlights the long-term perspective that some early adopters have maintained.
Let's briefly touch on the world of mining and some of the investment trends we're seeing. It sounds like the Trump family might be entering the Bitcoin mining industry.
Yes, there are reports circulating suggesting that the Trump family is making a foray into the Bitcoin mining sector. Given the profile of the individuals involved, this could certainly bring more mainstream attention and potentially investment into the mining industry.
Interesting. And a company called Cango seems to be making a pretty significant shift in its core business.
That's right. Cango is reportedly exiting its existing operations in China through a substantial deal and is pivoting its entire focus towards Bitcoin mining. This kind of strategic shift underscores the perceived potential and opportunities that some companies see in the Bitcoin mining space.
On the topic of established mining operations, it looks like MARI, or Marathon Digital Holdings, had a very productive month for Bitcoin production in March.
Yeah, the reports indicate that MRE experienced a significant surge in its Bitcoin production and the rewards it earned in March. This highlights the continued growth and operational efficiency of some of the larger players in the Bitcoin mining industry. They reportedly mined a significant number of Bitcoins and won a notable amount of block rewards. Pretty impressive numbers.
On a more international note, there's news about Kyrgyzstan and the founder of Binance collaborating. What's the aim of that partnership?
Kyrgyzstan is reportedly partnering with the founder of Binance with the goal of boosting its national blockchain infrastructure. These kinds of collaborations between countries and key figures in the crypto industry can potentially drive the adoption and development of blockchain technology on a broader governmental level.
Now, let's zoom out a bit and look at the broader landscape of DeFi, decentralized finance, and Web3. What are some of the overarching trends being observed?
Well, according to data from DapperDar, the total value locked the TVL and DeFi actually saw a decrease in the first quarter of this year. However, what's particularly interesting is that while DeFi experienced this contraction, the same report highlights significant growth in other areas within the Web3 ecosystem, notably in decentralized applications related to artificial intelligence and social platforms. This suggests a potential shift in focus and investment within the broader Web3 space, with new areas gaining traction.
That's a fascinating dynamic to observe. So, less money in pure DeFi, but more action in AI and social dApps.
Seems that way, yeah. It points to where the innovation might be bubbling up right now.
And there was also an opinion piece that touched on the challenges and potential solutions for handling payments for AI services within Web3. What are some of the hurdles there?
This opinion piece likely delves into the unique payment challenges that arise as artificial intelligence becomes more integrated into Web3 applications. Think about the need for, micropayments for using AI models or the creation of decentralized marketplaces for AI services. Traditional payment systems might not be ideally suited for these scenarios, and the article probably explores how blockchain and cryptocurrency could offer innovative solutions, such as enabling granular payments or facilitating trustless transactions in these new AI-driven ecosystems.
Makes sense. Getting those tiny payments sorted efficiently is key. Finally, let's circle back to the meme coin market and some of the developments surrounding Shiba Inu's Layer 2 scaling solution, Shibarium. It's always a hot topic.
The meme coin market, as always, continues to be characterized by significant volatility. The report highlights notable price drops for certain meme coins like Pi Network, Pepe, and Athena, underscoring the highly speculative nature of this segment and the potential for rapid and substantial losses for investors. However, within the Shiba Inu community, there's some optimism, with talk of a potential 60% price increase as their Layer 2 scaling solution, Shibarium, enters what's being referred to as its gold age. A Layer 2 solution, like Shibarium, is designed to improve the scalability and reduce transaction costs on a main blockchain like Ethereum. The anticipation around its enhanced capabilities seems to be driving positive sentiment for Shiba Inu.
So as you can see, the cryptocurrency landscape is incredibly dynamic, constantly shifting with price fluctuations, regulatory changes, technological advancements, and even legal dramas all playing their part. We've covered a wide range of topics today, from the performance of major cryptocurrencies to the latest in mining technology and the evolving world of DeFi and Web3.
What's truly fascinating is the sheer breadth and depth of activity within this space. You have established players like Bitcoin and Ethereum navigating market adjustments alongside the ever-present excitement and volatility of the meme coin market, all while new technological infrastructure and regulatory frameworks are being developed. This leads to an important question for you, the listener. With so much happening across so many different facets of the crypto world, what specific areas do you personally find the most interesting or perhaps the most concerning as you navigate this landscape?
Yeah, it's worth considering how all of these interconnected factors, the evolving regulatory landscape, the advancements in underlying technology, and the broader macroeconomic environment, might ultimately shape the future trajectory of digital assets. This is a space that really rewards ongoing learning and a healthy dose of critical thinking.
Definitely. We hope this deep dive has provided you with a clearer understanding of some of the key narratives currently unfolding in the cryptocurrency world. There's always more to explore, and we encourage you to delve further into any of these topics that particularly piqued your interest. What might be the unexpected consequence of some of these developments we've discussed? That's definitely something to ponder as you continue to follow this fascinating and ever-evolving space.